Hello and welcome back to Game of Trades. My name is Peter and today we're going to focus on the S&P 500. We've recently had a massive breakout above long-term bull market price channel resistance on the S&P 500. This is a major development. If we zoom out to the weekly chart, you can see that takes us above this line of resistance that acted as a strong reversal point for the past decade, right? We have strong reactions along the way, and this is a well-defined price channel, both as support and resistance. And now we're breaking out above this. What's happening right here is really a massive development. If this breakout holds, we can expect this bull market, right, that we've seen throughout 2020, this aggressive uptrend to actually continue at a similar pace and perhaps tag the middle of this price channel right here, or even the top if that breakout holds. But if it doesn't hold and we see a move back under that price channel, that's a big fat false breakout, and you do not want to be long on the S&P 500 in this scenario. So in this video, we're going to be asking and answering, will this breakout hold and set the S&P 500 up for much higher highs in the near future? So without further ado, let's get right into it. So to know exactly whether or not a breakout is set to hold or fail, we've developed a specific criteria to evaluate the probability of a breakout holding or not, based on three specific characteristics. So the first criteria is impulsiveness, then we have divergence, and then we have overextension. Now, if you're so far enjoying this video, make sure to hit the like button as hard as you can. It helps our videos out massively and really pushes us to keep on making high quality content for you guys. So let's start off with point number one, impulsiveness. So in order for a breakout above a long-term resistance or a very powerful resistance to be successful, we need that breakout to be impulsive. The stronger the move through that level, the higher the probability of that breakout actually holding. And this is something that we've used over and over again in our analysis to establish whether or not breakouts are actually going to hold. For example, right here, we had a beautiful pattern, a triangle pattern of consolidation throughout this period, and the markets broke out above this pattern in a very impulsive move right here. That was a massive 7% move through that resistance level before backtesting and resuming the uptrend. That's a high probability move on a very powerful impulsive breakout. But we can take a look at examples of false breakouts that fail. For example, right here, this example we have in this case study, we had a major top back in January 2018, and then the markets came back up to take out that high, but you can see what kind of price action we had throughout that period. That was very slow grind, small candles, not very impulsive, and just a few weeks later we had a fail back under that resistance, and that triggered a major move down in the markets. So you want your breakout to be impulsive, not a grinding type of price action. So that's the first check mark that we have with this current breakout that we're seeing. This is a very impulsive breakout. We had that bull flag pattern that we talked about in this video here, biggest game changer for the stock market in 2021, where we discussed exactly what's happening right now. We discussed the breakout. We discussed the high probability of the markets breaking out above this resistance because of this pattern right here. This is a very bullish setup. You have a beautiful leg up here leading up to that resistance, and then instead of having a powerful rejection, right, which is what you want to see if you're looking for downside in the stock market, instead of having that, we had a nice period of sideways consolidation, coiling up the price action, and that's bullish price action. That's what you want to see if you're looking for upside. And that was followed by a nice breakout here that you can actually get a measured target. That's a beautiful thing with patterns. We knew exactly where this rally was going to take us because we can measure the target by using this pole here and putting it on the second pole of the flag, and that's generally what happens. The two sides of the flag are equal in length, and that would take us around to where we currently are sitting on the SP 500. So impulsiveness is a check mark. Now let's move on to the second point, which is divergence. And in order to take a look at that, we have to put on the MACD right here. And what divergence is, if you've been following the channel for a while, you'll know exactly what it is. It's when you have the price go up and make a higher high, but the MACD goes down and makes a lower high, telling you that the price is starting to get overextended and that you're likely due for a reversal. You can see right here, you had a higher high on the price, a lower high on the MACD, and that triggered a massive drop. This is how we timed the top just before the major crash in February and March. And we managed to catch the very, very beginning of that move down in the markets. So the point I'm getting at is that you do not want to see divergence between the price and the MACD, between the price and the momentum during a breakout. Because if the price is already getting ahead of itself, it's unlikely that that breakout is going to hold. And you'll quickly notice that we do have a little bit of divergence on the markets right now. As the S&P 500 is breaking out, we are making a lower high on the MACD. So there is divergence. We had an overextended trend, but this is what we call unconfirmed divergence. And the reason for that is because we're still on bullish momentum. You can see the blue line is pointing up. It's above the orange one. And we clearly have the MACD pointing up. So as long as the momentum is bullish, we could still see these divergences get burned through. And that seems to be what's happening right now. We're starting to see the MACD rise higher than the previous high, which would negate these divergences. So that's something that we're looking at right now. We want to see this breakout continue as it's going so that these divergences are burnt through and we can have a beautiful backtest without divergence, and that can potentially set us up for another rally if we've managed to burn through these divergences. Now, the third point is the overextension of the trend. How overextended is the trend? Because if we're extremely overbought when we're having that breakout, that reduces the probability of having a successful breakout. So in order to measure that, we take a look at the RSI and whether that's an overbought territory. And you can see very simply right now, we're not yet overbought. We're hovering just under that overbought level. So we have no overextension of the trend as this is happening. In fact, what you really do not want to see on the RSI is the trend being overextended before that breakout occurs. And you can see where we were on the RSI before that breakout. We were right here. So we were not overextended at all. This was healthy price action, and it's only normal that we are now starting to get closer to overbought with this impulsive breakout. So if we take a look at the RSI, there's no overextension of the trend, but we can take a look at another indicator that we love to use to measure the overextension of a trend, and that is the percentage difference between the price and the 40-week moving average. So if we put the 40-week moving average on here, this is an indicator that basically tells you how far price is compared to that moving average. If we're very, very far, that means the trend is extremely overextended. And this is something that we looked at in one of our previous videos to take a look at whether or not we were in a bubble. And this is why I want to take a look at that right now, because we're currently breaking out as this indicator is very overextended. We're currently tagging this line, which only gets tagged when the price is extremely overextended. And you can see we can zoom out here. We have very few readings throughout a normal bull market, and these usually end up leading to significant corrections, right? You have a brief tag of that line, you get a correction. Same thing here, brief tag of that line, you get sideways action and then a correction. Same thing here in 2018. And so during a healthy bull market, these tags and overextensions are very rare. You can see we only had a handful of them throughout the past decade. But if we zoom out and go to the .com bubble, here's what that looks like. We have multiple readings throughout that period where the trend was extremely overextended. In fact, we can take a look at 1997 right here, where we had a similar breakout to what we're seeing right now. Big breakout. And what was that made on? It was made on an overextended reading. So having taken a look at our criteria for the probability of the 2021 breakout actually holding, it does seem like there's a high probability that this breakout actually holds. At least that's what it looks like for now. And so referring back to what we discussed in this video right here, seeing a breakout like this on an overextended reading reminds us a lot of what was going on back here between 1997 and 2000, as we saw the trend stay overextended for a long period of time as the markets were continuing on their move higher. So what we're watching out for in the next few weeks is whether or not the markets close above this line right here. That's what matters with these levels. That's how you trade these massive long-term channels. You're looking for weekly closes above that line. If you get a weekly close below, that's a false breakout and you're looking for downside, right? And we can take a look at 1997 as an example of that. Let's zoom in right here. You can see all the weekly closes were either right on that trend line or above that trend line. We had a brief candlestick wick, a sell-off, but we did not get a weekly close below that trend line. If you're enjoying the content that we present and you're interested in finding out more about our trading and investing strategies, make sure to go and check out gameoftrades.net. We post multiple market updates a week on the stock market, bond market, on cryptocurrencies. We have investment setups where we give you our specific entries and make updates along the way. So if you're interested in that, make sure to go and check out our website at gameoftrades.net. We do have a free trial, but we will be closing that up relatively soon. So make sure to go and get it while you can. Now, that's about all I wanted to discuss in this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time.